Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of May 2020 and we're publishing our gold and silver weekly update for the week ending the 8th of May. Gold rose $1 last week from $1,702 to $1,703, having hit a high of $1,723 and a low of $1,683. A rise this week of just 0.1%. In sterling terms, gold finished the week at £1,372. That's up £10. And in euros, it closed at €1,571. That's up €22. Silver performed better. It rose 52 cents from $15 to $15.52, having hit a high of $15.65 and a low of $14.74, a rise of 3.5%. In sterling terms, it closed at £12.51. That's up 50 pence, or half a pound. And in euros, it closed at €14.28. That's up 0.63 euros. The gold to silver ratio fell from 113.5 to 1 to 109.7 to 1. The Dow Jones closed on Friday at 24,331. That's up 455 points on the day and up 608 points on the week. The S&P 500 closed at 2,929, up 48 points on the day and up 99 points on the week. And the Nasdaq closed at 9,121, up 141 points on the day and up 517 points on the week. Brent crude closed at $30.97, up $4.53 on the week following the previous week's rise of $5. So we've seen a 2-week rise now of almost $10. And WTI crude closed at $24.74. That's up $4.96 on the week, following the previous week's rise of $2.84. The dollar index stands at 99.73. That's up 0.66 on the week, having been over 100 midweek. So an interesting scenario where literally everything was up. Now, the past 2 weeks we quoted that we would expect a degree of consolidation in the gold price, and this is again broadly what we've witnessed. However, in relation to silver last week, we stated the following, quote, "We're still of the opinion that allowing for a $1.50 spread, we shall see silver move between $14.50 and $16 into next week, with above $15 likely to be the majority of the day's closures." Well, we shall come back to that in a few moments. But firstly, looking at gold, we saw a degree of vacillation moving from positive territory into negative territory to rise again and surpass the opening on Friday, just prior to and during the non-farm payrolls report, after which gold prices then began to dip slightly. From a technical point of view, it is argued that gold is trading within a medium range and gradually forming a bull flag pattern, which is an identifiable pause before moving higher. Short term, however, the trend is moving downwards. Resistance is seen at April's highs of 1747 and support near 1674. So technically speaking, we're likely to continue with consolidation during the next week. Now, the US Labor Department reported a record 20.5 million people having lost their jobs in April. This is the non-farm payrolls report, a monthly record. The unemployment rate rose to 14.7%. Many of these believe this is only a temporary situation, though to be frank, we aren't convinced, and we'll be very surprised if 75% of those made recently unemployed will get their jobs back within the next 24 months, let alone the next 12 months. Now, going back to silver, it initially fell below $15 at the start of the week and then attempted to head for $16 as the week progressed, peaking on Friday at the figures we quoted earlier of $15.65. But then falling back slightly just before the close of the day. Now, the 50-day EMA sits at $15.50, and this is the level traders take particular notice of. There is considerable support at $15 and resistance at $16. But should $16 be broken to the upside, then $17 will be the next major target. You see, as firms slowly get back to work, then the fears of industrial demand for this precious metal falling further will gradually wane, and this will therefore act as a prop to silver prices. So we will give our forecast for silver at the end of this video for the coming week, but certainly of the two precious metals, it has performed much better than gold. Now, last week we pointed out that there was a considerable amount of economic data to be taken account of, with special focus on jobs. Now, we produced videos during the week highlighting the ADP figures on Wednesday, showing a minus 20.2 million for April, compared with minus 149,000 for March. This was followed by initial jobless claims with a weekly rise of 3.17 million, compared with 3.85 million the previous week. Friday's non-farm payrolls for April came in at minus 20.5 million, compared with March's figure of minus 870,000, and an expected, though, minus 22.1 million. So the figures were 1.6 million lower than, I suppose it's best to phrase, the most feared expectations. So the figures were strong enough to push precious metals into positive territory, but were not so bad so as to cause a major jump. So now let's take a look at this week's US economic news and data to be announced. On Monday, nothing scheduled. Tuesday, we have the Consumer Price Index for April, Core CPI for April, and the federal budget for April. On Wednesday, we have the Producer Price Index for April. Thursday, take note again, the initial weekly jobless claims and Import Price Index for April. And then on Friday, retail sales for April, retail sales excluding autos for April, industrial production for April, and the Consumer Sentiment Index for May, and that'll be an interesting one to look at. So again, we should watch out for the weekly jobless claims on Thursday and the data being announced on Friday. Now next week, we should see some interesting movements in silver, and we expect gold prices to be relatively benign. So silver will either follow through its end-of-week gains and make serious attempts to reach that highly resistive $16 level, or potentially fall back to its comfort zone of $15. Remember, we pointed out that traders are looking at the 50-day EMA at $15.50. Either way, we are proposing raising our trading band, our $1.50 trading band. Instead of being from $14.50 to $16, we envisage this week it's going to be between $15 and $16.50. Now, yesterday, we produced an interesting video entitled, Does $10,000 Bitcoin Challenge Gold and Silver? And if you haven't already done so, we strongly recommend that you listen to it, and we've put a link to this in the description box below. You see, with Bitcoin hitting $10,060 in early trade yesterday, and currently trading at $9,669, it is certainly attracting attention, even that of some serious investors. We should therefore bear in mind that for every dollar that goes into Bitcoin or a cryptocurrency, that's $1 less that could theoretically go into gold or silver. And the more popular Bitcoin becomes, Even though we see gold still moving forward, the rate or pace of gold may not be as great as others predict. That said, from an investment diversification point of view, it does make some sense to invest in both precious metals and cryptocurrencies, in addition to the normal equities, bonds, property, and collectibles. So this coming week, we are expecting more price movement in silver, limited movement in gold, unless, of course, there is some major announcement of which we're all currently unaware. What do you think? Do share your thoughts. And thank you so much for listening. And if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days, and we were going to put a video on that one late last night, but we've delayed it until today because certain landmarks have been reached today. And so this one will be published in the UK time this evening. We trust and hope that you have an enjoyable and safe weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.